You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back. It is Thursday. Time for episode 2 of your bi-weekly options extravaganza, known around the globe as the Option Block. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you at the top of the show, make sure you're subscribed to the full network. Otherwise, you're missing out on a whole heck of a lot. And if you want to play along in the official after party of Volatility Views, if you want to get pro Q&As, like the awesome one we did this week with some guy called, I don't know, Uncle Mike. Never really heard of him. Not a big fan personally. And then, of course, if you want to get giveaways, congrats to Chi-Town Indy, our pro member who won another awesome pro trading crate. I'm going to see if I could pull that Hedge Street iPod Shuffle from Dan's cold dead hands. See if I can give it away to one of you folks down the road. If you don't know what I'm talking about, check out Options Bootcamp from yesterday. A fun piece of swag from the industry, derivatives history. Popped up on that show. It was fun. If you want to get your hands on all that stuff, live streams, all that good stuff, exclusives, things nobody else gets, some things that are banned for the rest of the world, only for you to get. TheOptionsInsider.com/pro. You want to see what I'm talking about? Head on over to the pro to find out as we go around the horn and see who's joining us on the old program this week. First, out to the hallowed halls of Cboe East, where we are joined once again by the Flowmaster himself, Mr. Henry Schwartz from Cboe. Mr. Flowmaster, welcome back, sir. How go things in the hallowed halls?
Good to be with you, Mark, and everybody. Things here at Cboe in New York are busy. We're in the last couple months of the year, and I actually just updated my projection for 2025, and I'm back up to 14 billion. So October was so busy
Wild.
that there's a good chance, although we did just have a couple quiet days. So, but we're back over 70, looking like it's going to be over 70 million today. So things are busy, and I'm working on some new products and webinars and the usual, but also, I constantly kind of keeping one eye on the market. Today's an interesting one. We've a little bit to the downside, but we'll get into that.
If you had even spoken that number aloud just a few years ago, 14 billion, I don't think anyone would have employed you in the business, and you would have probably found yourself in a padded room by yourself, sir, eating nice soft foods. It's just such an absurd number to say out loud, and yet it is reality now. That's the world we live in, listeners. Options for everybody, including some guy named Uncle Mike from Uncle Mike Tosaw, or I should say Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to the show, sir. How goes prep for the big playoff game?
We're getting there. We're going to do our best. Mundelein Carmel's a tough team, so we'll do what we can do. And hopefully we do better than the Bulls are doing today.
Hopefully the market's doing better. Let's find out. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block, the portion of the show where we break down what the heck is trading. Our chat wants Optionetics swag. I don't know if we have any of that in the vault. I don't think we acquired any, shall we say, dubious swag from dubious entities out there. I'll go dig and see. I don't think we have any Optionetics swag. That would certainly be worth some money if we did have some of that lying around, because I think most of that was burned hurriedly to destroy the evidence by the guilty parties. But I digress. Is the market guilty? It looks like it's guilty of something because it's getting smacked out there today, listeners. S&P, NASDAQ, and Dow all off over 1%. Dow off about 1.1%. S&P off about 1.2%. NASDAQ off about 1.85%. So taking a bit of the old shellacking. You know, we saw this a couple of sessions ago. All of a sudden, the street is worried about valuations. All of a sudden, people are like, I don't know, maybe these AI multiples are a little bit rich. It seemed like, for whatever reason, Palantir maybe was the nail in the coffin, at least for right now. The straw that broke the camel's back. Pick your saying of choice, because it seemed like everyone collectively decided, you know what, this valuation is absurd. And they started piling on there. Then it kind of spread into a lot of other AI-related names. Then yesterday, of course, Uncle Mike and his cabal kicked in. And they're like, you know what? It was red. That means we are legally obligated to buy the next session. So everything gained most of what it lost back. Not all of it, but most of it. And then here we are right back down again today. So now it is a little bit of that more interesting tug of war between the Bulls and the Bears. The Bears have been sharpening their claws out there in the shadows for a while. They are hungry. They haven't eaten in a long time. So the Bulls are fat. The Bulls are lazy. So I don't know. The Bears might be out for blood. We shall see. We shall see if this amounts to something, or if this is yet another, hey, you should just buy every red blip on the screen. Because if you don't, Uncle Mike and his cabal will. VIX cash getting a nice lift out there today, breaking the 20 handle, got up to about 20 and a third. It was actually at about exactly 20 right before showtime. That puts it up over 2 points, about 2 1/3 points. As the show kicked off, it had eased back to about 19 and a half. That's still up nearly 2 points, about 1.85 points from where it was on the Monday show. So things still obviously frothy, a little spicy out there, listeners. I hate to, maybe we'll do a fun flash poll next week if we see a little more red persisting into the weekend of, hey, are you buying this sell-off or not? Because we've had a lot of head fakes in the past, but this could potentially have some teeth. VVIX 107, up 3 points from where it was last week. And once again, back in that loftier, north of par level. It seems higher now, but people forget we hung out here and above, north of 120 for a substantial period of time during the pandemic, well over a year, north of 120. So 107, and we still have a little bit more upside to go if things decide to get a little bit spicier. But when we're talking about spicy, there's no one spicier than Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, sir, first off, I guess the message got out to your cabal members to buy yesterday. I'm assuming you've been busy talking to us, so you haven't had a chance to get the word out yet to buy today. But what are your thoughts? You can't say your catchphrase for the first time in a while, sir. Does that make you downtrodden and just sad, sir?
Nah, not exactly. I mean, we pullbacks are healthy for the market, and then the value guy in me kind of likes it when we pull back a little bit because it just makes it more of an opportunity to buy more, I would suppose. So that's kind of where I'm at on it. It's interesting today. Today's a day to where when you have days like this, it makes me very excited to be an advisor that uses options. And the reason is that you have the ability to customize your risk. And if you do it right, it can really work out. So typically with my clients, we have 3 buckets of money. I subscribe to the bucket plan, so to speak, but I have my own version of it using options. But you have your near-term bucket of money you're going to need in the next year or two. You have your midterm bucket of money you're going to need in the next 2 to 10 years. And you have your long-term bucket of money you're going to need 10 years after. 10 years and later. 10 years and later, that's typically the buy and hold section of the portfolio for my clients. In some cases, some covered calls, but for the most part, that's the buy and hold section of it. That part's getting beat up a bit today. But what's exciting of where you can really benefit using the option product is in the near-term bucket, the 2 to 10 year bucket. So in other words, our covered call portfolio, going into November expiration, so roughly 2.5, 3 weeks ago, whatever it was, we decided that some of the stocks that we were using, we still liked, but we thought were a little bit frothy, if you will. And so what we were able to do is sell some deep in the money covered calls on them. And on there, some of the stocks went down, some of them stayed the same, some of them went up, like all of them. But it's just exciting to see that there's just a couple stocks that are going down pretty dramatically. And if they can just kind of hold off for the next week or two, then we have a chance of being profitable on stocks that went down because we went in the money with our covered calls. And things like that can be pretty exciting. A couple of weeks ago, I talked about on the show with our hedged portfolio, we were using a 1-year SPX put to hedge a portfolio of stocks. And we had done some other things with it back in April. There were some moves that we made, nothing worth mentioning today, but we had talked about on the show. But a few weeks ago, we rolled up the put and we've ratcheted in protection and profit. I mean, there's always the idiosyncratic risk. So theoretically, the stocks could go to zero and the market could stay the same. But assuming we get similar market movements to what the stocks are doing, then we've locked in profit for the year in our hedged portfolio. And we have more potential upside. There was just a client that I was working with this week who was a little bit concerned that this market was frothy. So we were able to ratchet up some of his protection. And so the joy and benefit of the option product is that you can do things like that. You can not only, a lot of advisors will look to do tax loss harvesting, meaning they'll sell a stock for a profit and then find other stocks that are at losses to offset the gains and things like that. Well, in the option space, there's just a ton of other opportunities to do that as well. So days like today, I really enjoy the fact that option trading exists. It's a wonderful, awesome, beautiful thing. And it's just really cool. In terms of what's happening in the market today, well, we're down 1.1% on the day. It's a pullback. Pullbacks are healthy for the market. I really believe that. At some stage, when you have such a ridiculous move to the upside like we have, it makes sense to hedge a little bit or do whatever you need to do to get some type of protection. When you have a VIX in the 15 area and you have all-time high markets, and me about losing my voice because of telling the world about the all-time highs, it seems every day, I think it's prudent to take some deltas off the table. And that's what you have the ability to do in ways with which I just described. So pullbacks are healthy when you have a big move like this. Now, in terms of, is this the beginning of the end? Who knows? Markets could still go up higher. But the one thing in probably the last 5 or 6 years that seems to be the case in my market observation is that pullbacks do happen, but they tend to be more along the lines of like what happened last April or what happened in, I believe it was last August, where, yes, you get the pullback, you get the crazy pullback that scares everybody and makes you not want to be involved in the market and just think everything's nuts. And then it continues to be nuts. All of your friends that are non-market participants or that are non-investment people on Facebook say things about, oh, this is the end. And then all of a sudden it seems like the buyers come in. So of the two pullbacks that we've had in the last couple of years, April of 2025 and August of 2024, they were pullbacks, but we bounced back really, 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 really fast. And so in the fast news, the fast changing environments with which we have right now, pullbacks don't seem to last as long. The other thing that although I cannot prove it, maybe the Flow Master can comment more on this, is that with the zero-DTE product, then maybe there's more demand or more ability to buy one-day options as opposed to just selling everything right away. So if you're going to panic, why not be a panicky put buyer, a panicky one-day put buyer instead of a panicky stock seller? My theory, but something to be said for options today. They are a wonderful thing, folks, and it's wonderful to be in this space. And that is what I'm seeing.
I'm glad you like options. Otherwise, you'd be on the wrong show, sir. You should be off in some other show that does not talk about options.
No doubt.
All right, let's keep on rolling out to the land of the Flow Master, Mr. Flow Master, sir. Obviously, you pick good times to come on the show. You seem like you have a lot of spicy days when you're joining us of late. A little bit more vol on the screen out there today. Looks like the numbers, I was just crunching them. Uncle Mike was talking. The numbers are pretty spicy for today. What is catching your eye in another hot Thursday, sir?
Well, it is interesting, right? I think we might have talked about this last week, right? The current kind of chatter is valuation concern. The government shutdown, I think, is also starting to wear on people a bit. But I've had more than two people send me the clipping about Michael Burry owning Palantir puts and Nvidia puts, and saying that these things just got so far from any reasonable value that he wants to be short him, and he is the guy from The Big Short. So people are paying attention, and Palantir's certainly gotten smacked. I don't know. He had a great call in the great financial crisis. I don't know about Palantir.
He's called a lot of shorts since then that have not really come to fruition.
Yeah. So, but to see VIX, it's actually still right at 20. It's kind of holding right there. Oh, now 1992. Definitely a little bit of a bounce for volatility. A decent pullback. You also have Tesla getting hurt, I think, on this $1 trillion pay package. Is kind of getting a lot of coverage, and I don't know, most of what I've seen is pretty negative about it. It's a big number, $1 trillion. I really actually do agree. A pullback is good, right? Shake everything up, let people kind of decide where they want to put their capital to work, let some people panic, right? We as market makers, we love panic and capitulation, right? Those are the trades that you absolutely must be on the other side of. It's hard to know at the moment, although in some cases, like, you do see something. You're like, wait, that person they're just puking a position, and they're not even thinking, they're just reacting. So today's VIX move is we're up almost 1.7, and I'm actually looking at our VIX decomposition page, which will be live. I am told it'll be live Monday. So as soon as it's there, I'll send you the link, Mark, and we can tweet it out. But this shows us kind of where the vol change is coming from. It's primarily kind of a priced in move. So it's not a kind of a freak out in any way. In fact, the upside convexity, right? That's basically the kind of the meaty part of the upside call wing, is actually up a little bit more than the downside. So that could be maybe the reason we supposedly kind of bounced pretty hard yesterday was because there was, some suggestion that the Supreme Court might strike down tariffs in general imposed by Trump. that kind of, I think, was a little bit of wishful thinking. But the way, as Mike said, buying the dip has worked for the last few years and made some people a lot of money. And so we do continue to see dip buyers. I mean, S&P down about 80 handles right now. That's a pretty good move. But we were up a solid, I think we're up about 45 yesterday. So, we're just kind of in a choppy market. I think there's certainly some concern. You're coming into the tail end of a year with the S&P still up 14%, even with today's sell-off, which is, a little bit over 1%. And so, that's when people might kind of, as Mike said, maybe trim your delta a little bit, maybe put on a hedge. I absolutely do agree, and we do see it, that the zero-DTE options, in terms of like if you want to bet on a bounce today or tomorrow, we see plenty of kind of, tactical positioning, we call it. And the truth is, as long as people don't kind of overdo it with the size, you buy an option for, whatever the premium you're paying, that's your downside. If it turns out we just crater, then, you know how much you're going to lose. $600, $1,200, whatever it is. But if we do get a bounce, you get you get that kind of very fast convex return, and with a lot of kind of inherent leverage. So, definitely more fear out there today than we saw yesterday. But so far, we're not really seeing any freakouts. Just kind of an orderly sell-off.
We're seeing some freakouts in the volume, at least. These are some pretty spicy numbers. I'm hard pressed to think of the last time we were this hot this early in the day. It's been a little bit. VIX, let's kick it off in VIX land. VIX, exactly 500,000 contracts, 500,000 exactly. So VIX is not the one I'm talking about, even though VIX is looking definitely respectable, already over halfway to its ADV, which is just shy of 1 million contracts a day now, 950. That's one of my own personal indicators, listeners. When VIX threatens 1 million contracts a day, the game is afoot. Something else is up out there in the markets, because that's not a normal scenario. If you're wondering what is the hot option out there in VIX land today, it's an interesting one. It's not our favorite. It's not everyone's favorite, apparently. The 15 puts in pick your month of choice, October, November, December. Nope. It's the Nov 16 puts this time, going up about 23,000 times today for about 9 cents. So we thought we'd put it out to you folks. Are you down to buy them or sell them? This just went live. So far, 100% of respondents want to sell those. They want nothing to do with the 16 puts for 9 cents. Again, it's only 9 cents, though. I thought no one would want to sell them, but there you go. Worth noting, there is some OI on the strike, as there was with all these put strikes. So that could be someone bailing. The Meteor option number 2 is actually the D19 puts for $1.50. That's an interesting one. That's normally the time of the year where you want to load up on some downside. Is in December. This year, maybe not so much. We've seen a lot of D's upside percolating in there, not just for market sell-off reasons, but there's also some Fed dust up potentially on the horizon in December. So a lot of things that could potentially keep vol a little bit more elevated. So do you want to pay $1.50 for any puts in this environment? That's probably the question. That's the question we've been asking. I know I've certainly been asking that on vol views. I think if it's north of $1 in premium these days, especially to the downside in VIX, I'm a little bit dubious, and so far that has saved my bacon more than once. Let's do a quick top 5 in VIX right now. 16,000 for number 3 of the Nov 24s. Number 4, 16,000 as well of the Nov 35. So maybe some vertical action. Looks like it's for around 36 cents or so. And the number 5, 15,000 of the Nov 17.5 puts. SPY just roaring out of the gate today. Uncle Mike and his buddies may not be buying, but somebody is selling. 7.65 million contracts on the tape already. That is hot. There have been days recently on the hot options report, listeners, where we barely exceeded that in total volume for the day. 8.25 million, for the full day. So 7.65 million already. SPY is hot out of the gate. The ADV 9.6 million. At this rate, we might hit that by the end of the show. And Hold My Beer Kid says the S 3.15 million. The S looking hot right now as well. The ADV 4.3 million. Probably going to hit that today unless the second half of the session just completely falls asleep. Small caps already at about 1.3 million contracts as well. That ADV continues to climb. The 1.8 million. I've been saying for a while, ever since it hit 1.5 million. Man, that's a lot of paper for small caps. Can they sustain it? And the answer so far has been a resounding yes. That ADV continues to grow. So small caps are maybe the unheralded story in this market tumult. They are moving and they are putting up numbers. And then, speaking of putting up numbers, the Qs saying, don't forget about me today. 4.5 million contracts already. Go run the numbers. Go listen to yesterday's hot options report. That's more than the entire day for the Qs yesterday. The ADV is 5 million. It's almost already at a day's worth of volume in the Qs. That is wild. So we are seeing some wild numbers out there that are certainly interesting, certainly eyebrow raising. These are not just your normal, hey, it's a sell off, we're putting up some volume. These are, there's something unfolding out there, which is kind of interesting, listeners. Let's go out to the single names and see if we are following suit there. And the answer, yeah, it's pretty respectable. In fact, it's past respectable. It's bordering on a banger. It has to be at 450 to break into the top 10 to be a certified banger. And, let me just rerun it on the Flowmasters platform right now, just to make sure that we're closing in, but not quite. If I filibustered for another 5 minutes, maybe we'd get there. But you know what? The show has to keep rolling. We are at 442,000. So within banger territory, let's say, to break into the top 10 today. That gets us to our old pal Amazon. Amazon, they are coming for it today, off 630 or 2.5%, trading 243.91. Again, good for closing in on 500,000 contracts already. Number 9, SoFi. They've had a nice long run up to the 30 handle and a little bit above. Coming back down today off 2.25, trading 27.86. They're off nearly 7% today. Good for number 9, 444,000 contracts. Number 8, snap your fingers. It's got to be earnings season because Snap's in our top 10. That's the only time they pop in. 806, so Snap bucking the trend. Apparently, folks liking Snap out there today. Up 75 cents or about 11%. Good for number 8. 463. So there is some green to be found out there on the screen today. You just got to really look. All right, to number 7, the artist formerly known as Facebook. The artist formerly known as a very lofty stock, still extremely lofty, but getting cut off the top a little bit since their earnings. Number 7, it's Meta, 518. 623.5, off about 12.33 or about 2% again today. So continuing their post-earnings downward spiral. Number 6, Robinhood. My goodness. They are coming for this one today as well. They beat estimates, but it doesn't seem to be doing much for them. Number 6, Robinhood, 573 on the tape, off $10 exactly or 7%, trading 132.41. Again, that's still a very lofty level. This is a stock that was, $10 not that long ago, so still has had a good run, but giving some of that back. Number 5, the fruit company, again, one of the few names that can buck the trend. Apple, 271.20, up about $1.25, about 0.5%. Good for number 5, 651 on the tape for them. Number 4, out to chips we go, AMD, 838,000 contracts. Is there a sector that is more poised on the precipice to give some back than chips and the whole AI-related side of the space, listeners? Potentially not, and AMD giving some back today, 241.69, off 14 2/3 or 5 3/4%. Now, let's see. They're still within spitting distance of their all-time high, 267. So not that, but they have come off a wee bit, obviously. Number 4, AMD, 838 on the tape. Number 3, it's the aforementioned Palantir, Uncle Mike's core holding. Now that he's unloaded all of his silver, I think his number 1 holding is Palantir now. He can correct me later if I have misspoken. But the Palantir, 177.90, off about $10 exactly or 5 1/3%. It sold them off to about 175 exactly earlier today. Already almost 1 million contracts, 902,000 contracts. The downward death spiral for Palantir continues as well. Number 2, it's Tesla. Everyone's talking about this $1 trillion. It is an absurd number when you say it out loud. Of course, it is in stock, so it's not just they're cutting them a check for $1 trillion, but still, it is a wild number to try to extort from your company that you founded. It's kind of wild. But either way, Tesla, 447 1/3, off nearly $15 or 3 1/4%. So feeling a little bit of the heat there. And then number 1, it's NVIDIA coming back to earth a little bit. I put in air quotes a little bit. Still a long way to go. They want to come back to earth. 188.48, off 6 3/4 or 3.5%. So 3.02 million contracts on the tape for NVIDIA. Before we get out of numbers territory, really quickly, Mr. Flowmaster, hot off the presses from our friends over there at OCC. We got the October numbers in our hot little hands. And I mean, these numbers are starting to just get I think the technical term is redonkulous, Mr. Flowmaster. October of last year, already a certified banger, over 1 billion. 1.1 billion contracts. That is a lot of paper. That is a historic number. That would be the most busy month in the history of the business a little over a year ago. And now we just expect it. In fact, we blow past it. October of this year, listeners, up, only 50% from that number. I mean, these numbers are astronomical. 1.68 billion we're already threatening we just reliably broke 1 billion contracts a month not too long ago. And now we are already threatening 2 billion. What are we doing here? Equity options up 63%, nearly 1 billion contracts alone just in equity options. My goodness. ETF options up 36%, over half a billion of those, 586 million. Index options up 39.4%, 129,000 of those. Even the futures getting the lift. Almost 6 million futures changing hands. So even VIX futures finally catching a bid. Mr. Flowmaster, I know when you're not talking to us, you're crunching the numbers. You just said ahead of the show you've upped your prognostication for the year to 14 billion with a B total contracts. I mean, I would have kicked you off the network if you had said that number just a year or two ago, Mr. Flowmaster. So these are absolutely astronomical numbers. What is your take, sir?
Well, it's really the same themes we've been seeing. It's more of everything. And I put a post on LinkedIn just showing that October was without a doubt the busiest month ever in terms of total volume, and it just continues to go one way. So with very active markets, we've got a lot of single stock stories, which really drives a lot of retail activity. We've got the zero-DTE kind of community that kind of has their systematic approach. It really is more of everything. So and I love this shakeup. We were talking before the show started about this Mag 10 index that we have coming out. And I'm doing a webinar on it next week, and it's down about 2.6% today because it's got Palantir, it's got NVIDIA. It does have Apple in it, but even though Apple's up, it's not. I think out of the 10 in the Mag 10, I think 7 of them are lower today. So it's just more of everything. So we've got a very active trading community. And then also, you get a little bit of extra bonus because we're into the, well into the fourth quarter, and the institutional hedgers, that really is when they start to put things on, because if they, hopefully they're outperforming the S&P, or at least they're not not underperforming too much. If you're up 14% and, we know, VIX is up, but vols are really not anything at any extreme ranges. You look at the kind of the cost of doing a hedge, whether you just outright put buyer or call buyer in VIX or put spread buyer, many different ways to slice it. But right now, the 30-day skew, I show it in like the 60th percentile in SPX. So it's just things aren't that steep. Hedges are not that expensive, and so we are seeing kind of some people put those on, and there's still plenty of unknowns, especially regarding kind of the shutdown and if and when and how it'll ever get resolved.
That is true. And if today's numbers and volume response to today's sell-off are any indication, if we get some more red on the screen throughout November, I would expect it to be an equally explosive, if not more explosive month from a volume perspective. So buckle up, listeners. You might be in for a wild ride. Speaking of wild rides, earnings season so far is off to a wild start. You can crunch all the numbers for yourselves, theoptionsinsider.com. Click on the Options News and Articles tab. I don't have time to go through all of it for you. We'd be here for 3 more shows. I would just say here right now, the season hanging out at 127% as of our latest report. So that is a certified banger. Remember, 100% is if everything moved pretty much in line with their straddles. So pricing in and I should say exceeding that by 27% is quite a spicy season. Will that continue? We shall find out. As it's time for us to find out what the Flowmaster has in store for us, it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for The Odd Block.
All right, listeners, it's Thursday. Time to unleash the beast that is the Flowmaster. See what he has up his sleeve for us this week. Kicking things off, we're going back to Gap Inc. Haven't talked about them in a little bit. You know them, the clothier out there, ticker symbol appropriately enough. Gap, 22 3/4 off about 3/4 of a buck, or nearly, actually a little over 3% now. Just ticks. So it looks like a rough day for them. On the year, you know, any sort of clothier that's reliant on a lot of imports for the business, it's been kind of a tumultuous year. They're net up, though, on the year. Net up about 1 1/4, about 5.6%. Even after today's sell-off, they were 21.5 a year ago. They sold off in April down to, looks like their low was about $17, $16.99. So they sold off, and then they rallied hard almost immediately after that, got up to about 29.25 in late May. So they did a lot of living between April and May, from their low for the year to the high for the year. They nearly doubled in that range. Then they fell back to earth pretty quickly. By June, they were back to about 21, and they've been kind of vacillating in this high teens, mid to low 20s range ever since. They had a nice little run recently from about 19 3/4 on October 10th, all the way up to about almost $25, 24 1/3 just last week, and then kind of falling back to earth a little bit now, back to 22 3/4. So they've been on an interesting run this year. Let's see what our well, I'll let the Flowmaster tell us. Mr. Flowmaster, sir, what did you spot out here in your favorite clothier Gap?
Sure. So, you know, on a day where we're having a reasonably sharp sell-off, I didn't really know if I'd call it sharp. We're kind of recovering a little bit. S&P's only down 58 now. I tend to look mostly for bullish call buyers, because I think that really is kind of what works the best in terms of trying to capitalize on unusual option flow. This was a pretty simple one, but it might kind of echo something from last week. So the trade today is a buyer of about 2,600 November 28th, 25 calls. That was this morning around 10:15, just before 10:15. Stock was 22.88. These are opening. They paid about 10. So, you know, it's a decent, almost $300,000 worth of option premium. They got about 3 weeks for the trade to work. And they're 10%, exactly 10% of the money right now. So, just a pretty simple call buyer. But what I'm actually kind of, I think is a little interesting, is there was a really large buyer of 50,000 D's 24 calls for $1 on October 17th, which might have been a replacement of an expiring position, but that's a big trade, and those are still open. So this is kind of more than just today's little call buyer. You know, that on the day on the 17th, 75,000 of these 24 calls were bought to open. So, you know, I mean, as you said, stock's kind of been around, kind of, I think it's slightly above the middle of its range, but for the year. But it's obviously a tariff. It's a tariff heavy name. So if we get some sort of big change, you know, the reduction or removal of tariffs, even if only temporarily, I would think the stock might bounce. So, I mean, the range for the stock is 17 to 28, and right now it's around 23, so, or 22.70. So just kind of middle, but just a you know, kind of your classic call buyer. But adding that to what we saw a couple weeks ago makes me think that, you know, it's a pretty big position.
Yeah, it's an interesting one. You know, Gap, not a name that immediately springs to mind right now. Looks like that pop last week was probably, you're right, driven by some of the potential détente between us and China on the trade war. Looks like someone maybe just specking on some more of that. Looks like our chat is intrigued by this as well. They think it's strange. Yeah, there is no, as our chat points out, there is no earnings. There is no other obvious catalyst in this range. So it does seem like it is potentially a spec on some tariff détente, in which case, you like those, listeners? You down for a little over $1 for the 25 calls expiring on the 28th? If so, perhaps Gap is your huckleberry as we keep on rolling out to, this is Mr. Flowmaster, you stole my joke. This is Aida. And I was thinking the exact same thing. I have no idea what this is, but you already stole my joke here in the notes. So how dare you, sir, steal my puns. But this is Aida. A-D-E-I-A is how it's spelled, listeners. Aida Inc. Ticker symbol Aida. And as the Flowmaster and I both have no idea what this name does. It's a newcomer to us, obviously. Trading $13.94, up 16 cents or 1.2%. This was another one that's had a very tumultuous year. A year ago was $14. So net, it's pretty much unched. But then it's had a lot of wild fits and starts. Sold off to about $11 and change in November. Popped hard from $12 up to $17 in February. Sold off again April 4th. Hit its low for the year. Looks like around $10.50. Rallied again up to about $15 in July. Then sold off again to $12 in August. Rallied again August 14th. So just a little dip in August back to 15. Shot up again to its high for the year of 18.25 on October 6th. And then came back down to earth 15.75, and rallied again late October, just into last week, 17.75, and then just fell out of bed over this past week. Looks like a bad earnings or something else. I'm going to guess earnings on this front really just clipped their wings entirely. Some of their subsidiaries are Tosaw intellectual properties, so that tells me nothing. This looks like it might be one of our fun little meme kids, Mr. Flowmaster. What did you spot out here in Aida as I go do a little bit more digging, because I have no idea what they do?
Yeah, I mean, it doesn't show up as hard to borrow. It definitely, I'm curious as to what industry they're in. It's a thin name. I mean, the average daily volume in this thing is only 107 contracts. Today it's traded 2,100 calls against 15 puts. So 20 times the total volume, and it's all in the calls. The average daily call volume is 93. And it's a couple of strikes being bought. The biggest piece was at 1049. Stock was 1371. Somebody bought 1,000 of the no 15 calls that paid basically 38 to 39 cents. And then there were kind of some dribs and drabs of other things a little bit later. Basically, it looks like the position building is in the D's 15s as well. So because you have 1,000 of those. Also bought, like I said, kind of small chunks. The VWAP price is 51 cents. Both of these open. I don't know if there's a catalyst on it. Like I said, it seems it's a technology name, so certainly could get memey on you. And it is a low dollar. It is a low dollar stock, right? Relatively 1379 ish. So I did. There was. Oh, the other thing I wanted to point out is just. This is a small trade, but the thing only averages 700,000 shares of stock a day anyway. So. 2,000 calls is, notional 200,000 shares, and it's a name that only trades 730,000. So in your kind of, comment about, could be somebody looking for something memey, that's the kind of thing where it's almost kind of unhedgeable if we were to get up towards that 15 strike, towards expiration, and the gamma gets big, and the stock just doesn't trade much. So you'd really move the stock if you're trying to delta hedge it using stock. So it's an interesting one. I don't know if I would take it just because still don't know what they do. And I've never seen it before. It's just so thin that I think you're going to end up, crossing a pretty decent, I think you'd be lucky if you could get in and out for just paying a nickel bid offer. So, but it's a bullish one on whatever it is these people do.
Their company description doesn't go far to dissuade me from that they're a memey type name. They say they're igniting innovation and shaping the future of technology and entertainment. They are a leading R&D company that accelerates the adoption of innovative technologies in the media, entertainment, and semiconductor. That's a very disparate mix. Semiconductor industries. Our continuous development of foundational solutions enables and shapes the future of digital entertainment, electronics, and high-performance computing. So I think they paid a consulting firm to squeeze in all the potential buzzwords they could into a nonsense bit of babble on that tells me nothing about what their company does. But there you go, listeners. It's a thin name. It's popping. If you put anything on in it, you're probably going to be wearing it in terms of having to ride it to conclusion because it's an illiquid name. But there you go. Our chat also has no idea what this name is. So there we go. We're not alone. So there you go. Always fun to find newcomers. And I'm always down for a good bit of corporate babble in terms of a description. Let's keep rolling out to one more name. Let's go out to Black Hills Corp, ticker symbol BKH. I think we have talked about them before, but it has been quite some time. This is an energy and gas name out of Montana and Wyoming and South Dakota, that region, aka the Black Hills, of course. $67.50, up 2 3/4, or a little over 4% today. So a good day for them today. They just had earnings, obviously a good number. On the year, they're up a little over $7, or nearly 12%. They've had a few fits and starts. They went from $60 to about 65 in November of last year, then fell out of bed January down to their low for the year of about 54.92. Then they popped up to about 61 in February and sold off again in June, about 55. They've been doing this dance 61 to mid 50s for a while. Then they broke out of it recently. They went from $60 on October 13th all the way up to where they are right now, 67.5, and they hit 68.40 earlier this morning, which is a new 52-week high for them. So interesting stuff out there. And Mr. Flowmaster, looks like somebody is still feeling the love out here. They came in this morning and said, Nove 70s, how are they? And maybe as a sign that this is not the most liquid of names, they got a nickel at 60 cents when the stock was a little bit higher, 67.80, listeners. And they said, you know what, good sir, I will trade 3,600 of these bad boys for 35 cents. So I'll have to go dig a little bit more to see exactly what they were up to, because it's kind of one of those split in the uprights type of fills. There are no earnings because they just had them, obviously. The next announcement is on February 4th, and they've come back to do a total of 4,400 on the day. So, Nove 70s, we got close to that today, Mr. Flowmaster, before kind of falling out of bed again. What are your thoughts? You think they were buying or selling these? And what are your thoughts on your new favorite Black Hills Corp Nove 70, sir?
It is an interesting one. I assume they were buying them. It did have earnings, right? It didn't have results last night or something?
Yeah, it had earnings, yeah.
Yeah, I mean utility names are, out of the 10 sectors that we kind of put all the stocks into, utilities is the dead zone. Very little trades. Although I suppose with the whole nuclear AI tie-up, I think there's some interesting things in there. It looks like a buyer to me. I mean, we had them worth 31 cents. It was a Philly floor trade, which you got to be a little careful. But there was some buyers of, they actually did a little cleanup first. It looks like they paid 26 to 27 cents for 400, and then they put up the 3,500. So it's an interesting one. I mean, if you want to get in, the stock is still there. I kind of like it. I think it's a buyer. They're paying, they're paying post earnings 22 vol. So, a little bit of time for it, November.
Interesting stuff. And you know what, listeners, there's always interesting stuff when you folks take the wheel. It is time for a little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's look really quickly. Right now, checking in on some of our polls. Our flash poll right now, the Nove 16 puts. I kind of thought this would be the case. 60% of you want to buy those now. 9 cents. It's too cheap to sell them. If you want to take a flyer, 16 strike, definitely better than the 15 strike. We've established that. And 9 cents, not the worst. Not, the clock is ticking, but you got some time. And 9 cents, not a huge outlay in case vol does go to die between now and Nove expiration. 40% still looking to sell those bad boys. By the way, folks should all pat yourselves on the back. You were all a smart bunch. Well, I should say exactly half of you were a smart bunch. Take out the 3.1% of you who were Weisenheimers, because we asked you back when the shutdown began. We said the longest or government shutdown in history was 35 days. Will this current shutdown last longer or shorter? 50% of you exactly went longer. It was almost evenly split, if not for we added a third choice, which is F this, I'm going to cash, 3.1%. So I guess if you add those into the shorter, then maybe it's 50-50. But either way, our audience, a savvy bunch. You should be applauded. The half of you that voted the right way. And as for our polls from this week, well, really quickly, let me pay off last week's poll. We asked you about the S&P 500 PE ratio. We said it's blown past 30, got up to 31, coming back to earth a little bit now, but still very lofty. Long-term average somewhere in the ballpark of 15 to 16, depending on how you look at it out there. The last two times we saw levels at that or higher were, of course, the Great Financial Crisis and the dot-com bubble. Not exactly two great cases for the bull case out there. So we said, does that give you concern? And 51.2% said yes, we're in crazy town right now. 22% for number 2 said no, you don't care about PE anymore. And then 14.6% number 3 said no, but because AI is changing the game for everybody, so the old notions of PE are antiquated. And then 12.2% of you said, I'm whistling past the graveyard. So you're still riding the train, but you're not that comfortable about it. You're a little bit nervous. It's been working out so far. Maybe now is the time to start listening to some of those voices in the back of your head. We shall see. And then we'll get out to our question of the week from this week, which is quite simply, if I could find it here, listeners. We asked you earlier this week, listeners, along those same lines of the S&P 500. We said, hey, right now, straight up, right now in your portfolio, how are you approaching the S&P? Could be SPX, SPY, we don't care. We said, are you just straight long, so you're riding that train? Are you keeping it long but hedging with some puts? Are you going the stock substitution route, so taking a lot of risk off the table and just riding a long call? Or are you reducing your position or potentially even going to cash? Uncle Mike, you've talked about your approach multiple times here on the network, how you're not averse to a little bit of protection in your back pocket right now. Which way do you think our audience is going? Are they straight riding the train that brought them all the way up here? Are they hedging with puts? Are they going stock sub, or are they dialing back the position, maybe going to cash?
Well, I think the audience is dialing back the position at this stage, but I do want to emphasize the importance of, I think you need both. Just changing your allocations is not a bad thing, but I think you need to have some diversification.
Mr. Flowmaster, same question for you, sir. Which way are you leaning right now? Which way do you think our audience is going?
I saw a nice chart not that long ago, and a great little phrase, which is "time in the market beats timing the market," and it's much more important. So I think that our listeners might be trimming delta, maybe going a little bit more towards cash. However, even with valuations that appear to be stretched, over the long term, stocks go up, and I think there's a lot of kind of funky economic games being played right now. I'm not a fan of all of them, but I kind of think that it has the potential to keep pushing things higher. So, I would say that I would think most of our customers or most of our listeners would agree with that.
Right now, nearly 41%, easy for me to say, 40.9% to be precise, are still riding the one that brought you to the dance, straight long SPY or SPX. We have a tie, a little over 18% each for hedging it with long puts or going stock sub. So you add those two together, you're talking about 36% and change are doing some sort of reduction. And then, of course, you add in the actual reduction, which is number 2, 22%, 22.7% are reducing your position or going to cash. So clearly, the majority of you are doing some form of dialing back right now, which is kind of interesting. Get over there at options and make your voice heard.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, where we tell you what we're keeping an eye on till our next episode. Real quick check in on the markets. Looks like the sell-off mitigating a little bit right now. S&P off about 0.9%. Dow off 0.2%. NASDAQ off only 1.5%. VIX cash coming down to 19 1/3 as we're ending the show. So it was right about a 20 right before we kicked off the show. So it's come in about 2/3 of a point since we kicked off the show. All right, let's go around the horn. Mr. Uncle Mike, we'll start with you, sir. What are you keeping an eye on until our next episode on Monday?
Well, I think you just need to continue to watch the shutdown news. Curious to see if the market even likes it, if and when we do go back to the government doing what it does. I think that's the main thing. And of course, a certain someone's Twitter account or a certain someone's social media releases, I should say. And that's pretty much it for right now. And then watching some high school football on Saturday, baby.
That's true. The administration and the government in general does seem to be a little bit sensitive to red in the market. So it'll be interesting to see if we have some more continued blood of red on the screen coming, if that maybe hastens a conclusion to the shutdown or not. We shall see. Mr. Flowmaster, Mr. Flowmaster, sir. Same question for you, sir. What are you keeping an eye on?
Well, I think shutdown matters. I listened to some coverage this morning. They said there was kind of a window to get it. Maybe things reopened before Thanksgiving. I mean, you're starting to see it hit travel, right? Where all the airlines are, where the FAA is cutting the number of flights into the big airports, and it's gonna piss off everybody, right? And the reason it hasn't gotten solved is because nobody really feels like making any concessions. But when the people that vote for them start saying, listen, I was delayed for 19 hours trying to fly out of Chicago, maybe they'll do something. So the shutdown for sure. I'm not a big crypto fan in general, but to see Bitcoin back at 100,000, that's something to keep an eye on. You got to remember the MicroStrategy, I believe kind of their average price in is around $75,000 per Bitcoin. So, if that's only down, 20 something % from here. So, and we don't have to get there for things to start to get a little bit squirrely. Like it just has to kind of feel like we're on our way there. So I am watching crypto. And then we have at Cboe, we have the Mag 10 index. I'm doing a webinar for Benzinga next week. If you Google Benzinga Mag 10 index, I think you'll find the sign up page, or I can give it to you, Mark. You can tweet it out. But given the way that this market and really all the stories are about how some of these stocks are very overextended, and it's a correlation and dispersion game. Some pretty interesting stuff there. So that's what I will be digging deeper into. In fact, one funny project I'm trying to figure out is, what do you think the implied volatility of the index will be, given that it's only 10 stocks and they're all super duper liquid? And so when the stock volatility runs from kind of like 35 up to 55, where do you expect the index to come in? It's an interesting question, and I remember trying to figure it out kind of in the olden days when there'd be a new listing and you're like, oh, I don't know what kind of vol it's going to trade. It's brand new. It's kind of along those lines.
All right, listeners, that music means we are done for this episode. But before we go, let's go around the horn. Mr. Flowmaster, we'll start with you. Folks want to check out either the webinar or all the other cool goodies you folks have cooking over there in Cboe land. Where should they go? What should they do?
Just head over to Cboe.com/RMA for our risk and market analytics. That's all our platforms and data sets. I'm going to post the Benzinga sign up on the Option Alert Twitter handle in just a minute. So if you're on X, go to at Option Alert, and there will be a link there to sign up.
There you go. You should be following the Flowmaster anyway. All sorts of good nuggets coming out there. In the meantime, you know where to go. Cboe.com is the place to go to begin your journey from whence all of this content flows. And Mr. Uncle Mike, sir, while you're gearing up for the big game, if folks want to reach out to you, where should they go? What should they do?
stcharleswealth.com. Would love to have a conversation with any of our listeners if you are looking for a financial advisor who does not fear the option product. And keep in touch. Check out St. Charles Wealth Management on YouTube. Content is coming hopefully next week if we can get everything figured out from a technical standpoint.
There you go. Keep an eye on it. Easy for me. I can't say it today. stcharleswealth.com is the place to go to learn more. If you're hanging out in the pro, you don't have to go anywhere. We'll be back in a little bit. I will be joined by our good buddy, Mr. Eric Norland, the chief economist over there at CME. They've always had cool research they're working on. He's going to share a bunch of it with you on a variety of products. Who knows? What will it be? Will it be equities? Will it be gold? Will it be energy? Will it be soybeans? You never know. You got to tune in to find out. It's always a fun time when Eric beams in and joins us here on the show. And then, of course, we'll wrap it all up with the Hot Options Report. Back again tomorrow with Dr. Vix and who knows who else to join us to talk about a wild week in vol. And then we'll wrap it up for the pro members with a little bit of Options Oddities, the official after party of Volatility Views. You want to get in there if you haven't yet. TheOptionsInsider.com/pro is the place to go to get past the velvet rope. Then we wrap it all up for everybody with the Hot Options Report. Check out that cool new report we have added to that show. It is really cool stuff. And then, of course, back again on Monday, another episode of The Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.